Cheers, everybody, to Casual Friday, and we're gonna do the routine briefing. A little different today, so cheers to you, and cheers to all that good stuff. So, what I want to do, thanks to Ernie's recommendation, is kind of just start off these briefings informally. I usually make my first trades around 10 to 10:20. Just depends on what the market gives us, and so I think it'll be uh, perhaps interesting to you to just kind of get involved early like that, and then we'll move into the more formal briefing, um, near that 10:30 time frame when the IBR pops in, and we'll see how that works. So I'm going to remind you at the beginning of the video that the first few minutes here, first 30 minutes ish, we'll see what the IBR looks like. Give or take, first 15. First 15 minutes, final answer, is just going to be kind of live trading and just starting off the day like that with the informal live trading. Trap was the word of the day yesterday. I guess live trading is the word of the day today. Anyways, so yeah. So if you are just tuning in here, if you're getting this from the newsletter and you want to go right to the good stuff, go about 15 minutes in, and we're gonna start then. So I'm gonna say 10:15, and if the IBR is in question, maybe a little later. So once again, if you're coming here from the newsletter and you don't want to watch live trading, because this is mainly for hanging out, go right to that 10:15 mark, so 15 minutes into the video, and you'll get all those specific levels. So if I do talk about them in the beginning here as we just kind of start the trading day, I will reiterate them at that portion of the video as well. So that's how we're going to do it. If you're getting this and you want to come hang out, I'm going to start doing this at 10 o'clock on YouTube Live here. Perhaps a little earlier, it really depends. Usually I don't take the first trade until 10, almost never until 10. So it just kind of want to start the day off so everybody can see what's going on with the live trading, because that's really the whole point of this, is to build out a nice futures model and a good 0DT model that everybody can use, everybody can benefit from, and got to hang out and talk about it, I think, to make it work. So I'm going to go silent here unless somebody pops in and chats just for a few minutes, and we'll get into the formal briefing shortly here. So stand by for that, and if you want to see exactly what the trades, the exact trades that I'm looking at, if you go to the description of this video and you go to that routine trading folder, routine day trading barb is the name of the futures model, we'll call it. Hopefully it's going to become a bot at some point, and yeah, so the barb stands for brains and robots, and I feel really clever about that, so that's why she's got a name. Yeah, so I'm going to hop in here, get my warm-up going, looking for a trade at 10:10 for the first signal, and what that'll be is if we do print this red candle, it'll be a lower low on that candle. I'm personally hoping that we do see some type of trend day today. We haven't had one for 6 straight sessions. Yesterday, I know we had that big trend move, but for my signals, I didn't even get a signal until we were near that 80 mark. So this really, what was that, like 30 points was just untradeable for the system. So I'm still looking for that trend day. If you go to, I'll pop this in here. If you go to this warm-up document, also in the description, and you look at the barb futures trade law, you can just see it's been a really tough week, because this is the week that I took it live, and as one knows, Murphy's Law says that we must have a new drawdown from the high. You can see that there, about $8,000 is a drawdown from that most recent high, and that did happen this week. And so what that tells me is not that the strategy isn't working, but that we are near some type of trend move, and that's when we really get paid on those trend moves. Yeah. And why do I say that? Why do I think the strategy is not failing? Well, we have, so this is 172 occurrences. However, I didn't even start breaking them down until the 21st. So from January 3rd to the 17th, the same style of trading. It just I didn't have them broken down just because I was tracking it. I wasn't being super diligent because I wasn't, you know, didn't know if it was going to work or not. So it's kind of hard to do all that trade logging when you don't trust something. It came out well, and if you just kind of extrapolate, it's about 150 trades a week. You know, that's about 8 weeks. So we do have over 1,000 occurrences, give or take now. No mechanics have changed. It's just the data's gotten more stringent. So anyway, that's my defense. New drawdown from high bodes well, I think, for an imminent trendy day. So we'll see there. One thing that I realized that I haven't talked about in any of these briefings before is one of my favorite little tools here. So this is my copy. So if you just Google, I think it's Minervini result based assumption forecast. You can go to Reddit here and you can get a copy of that. Let me make sure it's still there. Yep, just go right here, go there, and you can make a copy and build your own. So I find this you can you can look this up a little more in detail if you want to know exactly what it is. I think it's really just a great way to kind of gauge the validity of one system. So I just plugged this in yesterday with this yesterday's data I just included because I was in the middle of a drawdown. So I was a little concerned, and so what I did, I just got rid of all the good data, and I just looked at the data from the drawdown, and that's why these statistics are not quite as pretty as this. Yet still, you plug it all in. So portfolio size, this is a $50,000 futures account. I was going to do $100,000, then I was thinking $10,000, but I think $50,000 is a really good baseline. If you want to just start trading futures, saving up 50 grand, I know it's a lot of money. You could probably start with 30 grand if we're being honest, but that's what I'm using. So that's the baseline portfolio. Position size is 522. Excuse me, not position size. Anyways, let me slow down. You fill in those pretty numbers to make them match your average win, average loss. Again, it's slightly lower because I got rid of the good stuff, and you put in like your win rate, and you just fill that out, and it pops up your number of trades. So the goal that I'm looking at is 100% return. I want to see how long that's going to take, and it says that we should get about 100% return every 1 or 2 months. We'll see if that holds. That seems pretty darn good. But yeah, I just want to plug that real quick. I think it's a really useful tool, and I'm really big on logging trades. You don't have to do it manually. There's plenty of good software to get this as well. I just like doing it manually because I like to sim trade every single day. It's kind of like my practice. Coming from a athletic background, or quasi-athletic, I tried to be an athlete. I think that you play how you practice how you play. Insert motivational quote here. So looking at this, we got about another minute until it confirms. Again, I'm going to take this short. I am hopeful that we do get a trend move. So it's very possible that it gets stopped out, but just going by those mechanics, which just to plug that one more time, routine day trading is in this routine trading folder. So let's just actually do it the right way. Go there. Boom. And this is a strategy barb. And I do not deviate from that at all. And so days like yesterday and days like we've been seeing this week are just punishing. Yesterday was particularly emotionally challenging because we had a big drawdown. And then at the end of the day here, so we draw down 78 points. And at the end of the day, when we were at the peak here, I had 8 contracts and I was up roughly an additional, I have to do math here. Let's just say over 100 points. And so the strategy dictates that you have to hold until you get stopped out. And unfortunately, 50 did stop us out. That was a $4,200 difference there. So, yeah, if you are trying the strategy out, I recommend you start small. I am just so used to different numbers in the trading game that I'm immune to that at this point. But you really can't afford to deviate from those winning days. You can't take profits early. I don't think, as I've just been looking at the test here. So obviously, if we get a formal back test going, that'll change. But yeah, so if you want to sim trade as well, I think a good day, really a great week, is just to kind of go after it this week. Oh, nice. Ernie's here. So just to finish that comment, go after it this week. in the sim. It's been about as challenging as it gets, and so I think it's a good way to get used to it. Yes, Mr. Ernie. So you missed the cheers. It's Casual Friday. I've been doing that for a while, and so I figure I got to embrace that with these routine briefings as well. So they're short at 4007. I am not yet in anything, so we just got that red candle print. For me, the first short signal will be if we do make a lower low here. Um, Otherwise, I gotta wait. I don't have to, but otherwise, according to the system, I'm waiting for another touch of this zone here, or which I'm gonna turn white, or a touch of one of those lines there. So I am going to what am I going to do? I'm going to move to the warp document here. I'm going to get a bit of the formal briefing going as we just kind of wait around here, and we'll go from there. So, what do you have? Nice what? Oh, you have comma. Nice, got it. So, Ernie, when did you pop in? I had a little spiel at the beginning. Oh, good. Okay, so you heard the whole thing. I'm taking your idea. I think that's actually a good idea. Starting at 10 with just kind of coming to hang out here, doing some live trading, uh, and then doing that briefing after. So, because I don't start trading till 10, so we can see basically all the trades live. And I will move. So after the briefing, I'm going to move to Twitch and then do just kind of hang out there. Same thing. And then at do the okay, cool. Yeah, then do just the standard DJ thing, and then come hang out with you guys at 2 as always. But I'm gonna take that idea. I think that's a good idea, so that we can trade live. Open 4005, easy enough. So I'm just filling out the warm up right now, and then I'm gonna take some notes for the official briefing. And I told everyone at the beginning of the video for newsletter people, uh, at 10:15 is kind of when I'm gonna hop into the actual briefing part of it, and so that's what we're gonna do. Another open auction look. Yes, high five. Yeah, so it's another open auction look today, unfortunately. That is the choppiest type of open. Obviously, things can change. We are not getting any strong conviction as of yet. Not bad. Not bad at all. Yeah, I didn't really believe. I'm super happy actually that I didn't get that short signal because I mean you scroll out just even looking intraday. That's if that's not an inverse head and shoulders, I don't know what it is. So I do think they're gonna at least go after that 35 level eventually. We'll take the signals obviously, but it's not a bearish look by any means. I don't think. Let's see if volatility's doing. Yeah, I mean volatility's almost about to break through that demand zone. So all right, so it's 10:15. So anybody who fast forwarded the video from the beginning, we have not had any trades, so you haven't missed anything. And this is kind of going to be more the traditional routine briefing portion of the video. I just want to get a couple more. points here on our various charts, and we will hop right in. So current IB range, let's see, it's about, oh, what do you know? It's 20 once again. So we'll see if that expands in the next 15 minutes. I'm going to leave that off for now. I'm actually going to let the TPO sit for now because I'm not sure if we're developing one of those neutral looks or potentially another trend day, or excuse me, potentially a trend day. So we're gonna hold off on the TPO for a few minutes here, and I'm just going to plug some more numbers into the document because I've been running my mouth here. 39.98, 19.1. Stand by if you fast forwarded the video. We're just about to get started here. Okay. So let's look at our levels for today. It's the last part of the warm-up document. Out here a little bit. I don't think we'll get too much below 39.25 even with a big sell-off, so I'm only going to start there. 70. Very nice levels. A really, really clean look for once. Even if we do chop, at least the level side of things is, I think, nice and tidy. And what's nice, if we do get above that 35, at least for me, it does look like a bit of a breakout point. So that's pretty clear as well. So we're going to hop right into it. So I'm going to cheers you again with my protein shaker full of water uh, to this casual Friday and I dare say a potential trend day. Retail trading team. We're jumping right into the routine briefing itself. So I get water on my nose. We're going to go start with our warm-up document, which again, I have not updated the TPO portion yet, so we're gonna keep that empty for now until we get the 10:30 candle, and then we can revisit that TPO and IBR. So really, I think the main things to look at is this overnight inventory. It's up yet balanced, so we don't have that net short or net long look. Again, I think that feeds the bull case. Open auctions not great for that trend type look. So as of now, at least, there is indecision. No surprise, we had from high to low 40 points overnight. So once again, the big range so far has been overnight, and so we'll have to see real conviction through first this major 15 to 10 to 15 zone, and then even up to 25 and 30. There's a good amount of potential supply there as well. Yeah, once we get through that, that's when I think we can start to break out nicely. So if you're not familiar with this document, you can access it by going to the description of this video and clicking on Daytraders can warm up with me here, and that will get you to this document, which I fill out every day. You can see BARB, which is the future strategy, um, and also there's links to other option strategy and cool stuff there as well. So this is a routine warm up. You hear me talk about it all the time. This is what I'm referring to. So that's what we got going on. Again, this is going to be important in this TPO section, but really got to wait until this 10:30 candle, and then we'll go back to that. Until then, let's just kind of look at the charts, starting with this daily chart here. So I'm keeping this side by side on my actual execution chart now, just because I had too many levels, I think, because I was overlaying these levels onto this chart and it's got a little messy. When I replayed, so as I've said several times, I replay every day. One sec, we might actually get a bit of a higher high here. That'll be a long signal. I do replay every day, and I look for ways to improve. And I think that when these are overlaid, it gets a little choppy. I don't like taking those trend line plays. So going back through the log, and you can see it yourself. You look at that barb trade log. There's so far at least it seems negative expectancy on those trend line plays. It's nothing severe. It's pretty close. Obviously, we had a breakout day, so I think long run it'd be probably profitable. Yeah, I think there's enough other levels that we don't have to worry about those trend lines, which are just magnetic. You have people on both sides fighting it out, so it makes a lot of sense to get trapped around there. So anyway, so that's why you're not seeing these overlaid onto the execution chart itself anymore. Um, just a couple major points. So yesterday you had one of those outside bars. Uh, that's a really bullish sign to me, and you can see it's kind of following the trend. So at the low, you had several outside bars, bullish outside bars. After this consolidation, you had another, and finally, this is kind of to me signifying a potential reversal um, from yesterday there. So this huge, what I see as demand zone is just moving up. We're currently above all the junk and trend lines, and once we get through this big chunk of supply, I think that's when you can break out a little bit higher and complete what is actually an inverse head and shoulder inside the inverse head and shoulder. So if you've been watching these briefings, you've heard me talk nonstop about the daily inverse head and shoulder that started developing really around that December consolidation. I think that's when you really got the good look, and now you're kind of seeing a inverse head and shoulder inside that, an analog, if you will, and that's kind of what I'm looking at as well for the bullish case, especially if we're above the trend lines. And as we'll go look at volatility, as long as that keeps behaving itself for the bull side, I do think that. As I always say, that the 2022 bear market was cyclical. It concluded on October 13th, and we're going to have a little bit of sideways to higher chop for a while. Are we going to make a higher high anytime soon? I don't know. I want to be surprised, but I wouldn't be surprised with the strength of the bulls. We'll say the hogs on the bull side uh, seem to be able to withstand anything. If you look even at the bear market, it really was a bear market for junk companies or tech companies. The generals, as I say, like Apple, did not take too much damage, and yeah. So, anyways, that's why I think that the hogs have not yet been slaughtered, and why it's eventually we will see um, another bear market emerge here. I don't know when, maybe around the election 2024. Hey, maybe this year, you never know. So anyways, I'm going to get a long signal here. We're going to go ahead and pop in for our first trade of the day. And yeah, so like I said, you can look at the uh, routine trading document, a routine trading folder, day trading document, see my exact mechanics here. Um, so we'll see how that trade plays out. That is my first of the day. And just moving on from this, so very bullish look in my opinion on that macro chart. Moving on from that, if we look at the TPO, excuse me, going to attach this window. So I'm still waiting for something convincing here. I gotta say this is a trendy looking TPO right now. It's not super clear. It's not uh, not the strongest trendy look. However, I just think that you're seeing from that overnight session we bounced right off that single. We have not even retaken that naked POC at that 95 level, and we are moving higher with not too much volume spent in consolidation. So if this holds, I'm going to say it's a trend TPO on the warm-up document, and I will fill in the corresponding column. And if anything changes, I do keep y'all updated on Twitter if there's any meaningful intraday development, so you can just kind of stay tuned there if you follow that warm-up document. So other points on the TPO. So like I said, we have that 95 naked POC that might perhaps present a magnet if we do get any type of bearish move again, and also a support once we get down there. And then after that, you can just see the various singles. You have the one at 39.80, you have one at 39.70, and another one at 39.50. Naked POC again, also at 50. I guess it's kind of 55, so 50 to 55 is also a relevant zone that I'm going to put in our chart here, or our warm-up document. So 39.50 to 55, 70, and I guess we should put 80 in there too. So I'll throw 80 in there as well, just in case it goes down there. Want to be aware. Apple down 30% in 2022. That is true, Mr. Ernie, although I would argue if you look at it on a 20-year chart, uh, it's not that much of a pullback. Didn't even get to no, didn't even get near 2020 lows. So, oops, I better get ready for this ad. But you know me, they call me Barrett for a reason. Let's get this ad going. All right, so poor high. I think that's why this zone up here, that 35 level is also important. That is going to be, so remember poor high. That's weak hands, weak-handed longs that will likely abandon their positions as we get closer until they don't, and we squeeze through it, and that's where you have that sustained breakout. You can see that there's various levels here, just naked POCs, nothing really too substantial, but we'll put them on the chart anyway. 40.55, 40.70 area, and really I think 40.70 to 75 is a pretty darn good resistance if we get there. So that's what I'm looking at TPO. Again, to me, still that bullish look, yet it does give us a few decent uh, decent levels. Sorry, I got caught looking at the other charts as trying to finish my sentence. So, all right, so yeah, so that's a TPO. Added those levels to the warm-up document, and I'm going to add them to this chart in just a second here. So one more chart to look at, the ever important VIX, and what's going on here. Something that we've been talking about all week. VIX has actually been really, if anything's been behaving itself this week, it's been the VIX. It's been kind of fickle for a while now, yet you can see this week, we've been talking about all week, like what's going to happen when we retest the bottom of that channel or wedge, whatever the pattern is. When we retest the bottom of that pretty line, are we going to pop through, or are we just going to keep getting rejected? You saw rejection. Finally, that big rejection back to what we've identified as that kind of significant demand zone, if you can call anything in the VIX a demand zone. That important 20 level. And we'll be looking here to see maybe if they turn around today. But if we start to break through here again, that I think just lends to the idea of a potential breakout on ES to reclaim some of what's been lost, or some of what was lost in February. And yeah, so that is all I have for you on the price action front for today. So I'm going to move from here to Twitch for anybody who wants to come hang out. I'm going to trade live there from now until 2. From noon to 2 is when I'm going to play a DJ set. So I'm sure at least 7/8 of anybody who comes over there will run away very quickly once the music starts starts blaring. Yeah, hey, if you want to come hang out, I'm gonna go move there, and I'm gonna try to do that. I don't want to say every day from now on. It's kind of a big commitment, 10 to 2. Yet we'll do it today, and I'll let you know when I do it in these briefings. So, like I said, that's all I have for you for the routine briefing itself. As always, please feel free to tweet Routine Trader with your thoughts. And also, if you want to follow me there on Twitter, I will keep everybody posted with updates throughout the day if and when anything changes. Subscribers to the email can also respond to any email, and I will respond to you there as well. If you're not a subscriber, what are you doing? Retailtrading.com. Let's get on that. You get a nice, pretty package of the briefings and a screenshot of the warm-up every day, so you just have a quick reference point there. And I also include a fun feature statistic for anybody who likes the quantitative side of things. And yeah, so obviously also happy to answer any questions in the comment of this video itself. So if you did enjoy today's content, please give the video a like to help with YouTube's algorithm. I'd really appreciate that. And besides that, it's time to trade. I'm moving to Twitch at Retail Trading Live. And I thank you for watching here. And cheers to you. Stay classy until we talk again.